Hey there, welcome back to our channel. Today we're going to be discussing order types in futures. We'll look at the various order types available, when you might want to use those order types, how to place those orders, and the things you should be considering with each order type. We'll also take a quick look at how QTN makes selecting the order type incredibly easy with ClickTrader. So let's check it out. Okay, I've got a document here that describes the different order types, so let's take a look. First, we'll talk about market orders. So you'll see on the left, I have a buy market, and on the right, I have a sell market. So what a market order does is it executes immediately at the best price available in the market. So this is to be used when you just want to get in the market. You don't really care exactly what price you get filled at. You enter a market order. The downside of using this type of an order is you can experience slippage, and that slippage can be significant. So what is slippage? Well, that means that you might get filled at a higher or lower price than you expected. So for example, in these charts, the current price shows 2407. However, if I submit a buy market order, I might get filled 1, 2, 3 ticks higher. And depending on the instrument, the liquidity, and how fast the market is moving, it might be quite a bit of slippage. Same with this example on the sell. The current price might show here, but my fill might actually be much lower than I expected. So slippage is the main reason we would not want to use a market order, because those slippage ticks can mean the difference between a profitable strategy and actually losing money. So what are our alternatives? Well, next up, we have a limit order. We have a buy limit and a sell limit displayed here. A limit order is placed below the current market price for a buy or above the current market price for a sell. This order is typically used when you're expecting a pullback and then continuation of the current trend. So in this example, if I expect that the price would pull back to this level and then take off again, I would place my limit order at this level so that when the market reaches this level, I will have a buy order that is guaranteed to fill at this price or better, so I don't have to worry about slippage. The sell limit order is placed above the current market price and then follows the same idea. You would expect the market to go up, fill at that price or higher, and then you would expect it to continue downwards. The benefit of a limit order is you won't have to worry about slippage. You're going to get the exact price that you want. However, the downside is if there isn't liquidity at the price you specified, your order might go unfilled. Next up, we have the stop market orders. A stop market order is placed above for a buy and below for a sell. And these are typically used for breakout trades. So if you expect the market to go up, break through a level, and then continue up or continue down, that would be a typical use case for a stop market. The way stop orders work in general is the order price becomes a trigger price. Once you hit that specified price, the order triggers and becomes a market order, filling at the best available price. This order type is the most commonly used type for stop loss orders as well. So that when your position goes against you a predefined amount, it triggers a market order to exit the position. Next up, let's look at stop limit orders. Stop limit orders are similar to stop market orders in that the stop price is still a trigger. However, it triggers a limit order instead of a market order. The limit order price can be defined the same as the stop price, or it can be a certain number of ticks offset from the stop price. When you submit that order in NinjaTrader, there will be a pop-up window asking you to define the offset number of ticks for your limit price. The same thing applies with limit and market orders. With a stop limit, you're not guaranteed that you actually get filled at your limit price. You could go unfilled. With a stop market, you're going to get a market order filled. However, you might have more slippage than you anticipated. Next up, we have the MIT or market if touched type order. A market if touched order is similar to a limit in that it's placed below for a long position and placed above for a short position. This order type is almost a hybrid between a stop and a limit, where if we're waiting for a pullback, if we place a limit order, like I mentioned, we're not guaranteed to be filled at that price. If you know you want to be in the market regardless of the fill price, you would use the market if touched instead of a limit order. That way, if the market retraces to your level, hits the price, it will activate the trigger and execute a market order instead of a limit order. Once again, you have the risk of slippage, but you're taking the trade-off of having the assurance of being in the trade and accepting the slippage that might come with it. Lastly, we'll talk about OCO or one cancels other. Now, this isn't necessarily a separate order type, but it means that anytime you submit any of those other order types besides the market, you can specify those order types as OCO orders, meaning that when one of those orders gets filled, the other ones that are linked would get canceled. So a typical use case for these would be a breakout scenario, as you see on the left, where if the market breaks up and triggers your buy order, then the sell order will be canceled. If the market breaks down, activates your sell order, then the buy order will be canceled. On the right side, you'll see a typical ATM strategy with a stop loss and a profit target. Stop loss and profit target orders are OCO orders, meaning that if you hit the profit target or the stop loss, the opposite order will be canceled. So let's take a quick look at the chart in NinjaTrader and discuss how to enter these orders. When you have your chart trader enabled, to place orders the standard way, you can right click and see the pop-up menu. And depending on where you click, it gives the valid options at that level. So I have a sell limit or sell market if touched, because those are the valid options for sell. I have a buy stop market or a buy stop limit, because those are the valid options when I'm clicking above the current price. If I click below the current price, you'll see I have the opposite. I have a buy limit and a buy market if touched, and I have a sell stop market and a sell stop limit, because those are the valid order types when clicking below the current market price. Now, when using QTN Click Trader, you don't need to choose from a menu of options, because depending on the hotkey you're holding down, QTN will know based on where you click what type of order you want to submit. So for example, if I'm below the current order price and I hold down my long hotkey and click, it knows that it should be a limit. Likewise, if I'm above the current market price and hold down my long entry key and click, it knows that it should be a stop order. Now, what about the difference between stop market and stop limit? If you go to the configuration for QTN Click Trader, you have the stop order type, stop market or stop limit, and you have an entry order OCO function. So if you check this box, then all of the entry orders that you submit will be entered as OCO, or one cancels other order. That would allow you to place orders above and below the market for the breakout strategy that we discussed. Currently, QTN does not support market if touched, as it's a less commonly used order type. However, we plan to add that in a future release. If I select stop limit, it offers me the option for the stop limit offset. This is where I define how many ticks different from the stop order I want the limit order to be placed. You can make it 0, you can make it positive or negative. That will be offset from the price where your stop order is placed. So based on the current market price, if I hold down my Alt key, which is short, and I click above the current order price, it understands that should be a limit. If I click below, now it's a stop limit order with my defined ticks of offset. Now, both of these orders are also one cancels other, meaning that depending on which one gets filled first, the other one should automatically cancel.
Order filled.
You'll see that happened. My order got filled and the order that was above the stop limit was canceled. Let's take one look also at the ATM strategy configurations. If you open more options, you have the option to click stop limit for stop loss. Otherwise, by default, it will use a stop market order. And you have the option MIT for profit. So if you click MIT, instead of placing a limit order for your profit target, it will use a market if touched order. If you check this box, QTN will not be able to move your profit targets. That will be changing in the future, but for now, the current version does not support MIT. So that was a quick intro to future order types and how to use them with NinjaTrader and QTN. Hopefully this added some clarity around the order types, when you would use them and what the trade-offs are with each order type. That's it for today. Don't forget to go to our website, which is linked in the description, to download your free trial of Quick Trade Ninja QTN so you can try out these features for yourself. If you found this video helpful, we'd appreciate it if you'd like it and subscribe to receive future videos. We really appreciate that. It helps us reach more traders like you. Thanks again for watching, and we look forward to seeing you in the next video.